it's tough, and it's very, very emotional because these legacy brands have been handed down generation after generation.
What are you seeing that's really driving the interest here in this space, and why is it such a hot commodity right now for PE? Welcome back to the Raw Selection Private Equity Podcast. Another cracker today. It's Paul Adams, a proven private equity-backed, multiple chief executive and a specialist in the home and residential services. He absolutely loves his industry. He's going to give us a big insight into what's happening in the sector, the huge attraction that is surrounding currently the HVAC services and similar type industry spaces within that world in the US. So welcome, Paul, and thank you very much for joining us on the podcast. Paul, if you can share with us a brief insight into you, please.
Yes, my name is Paul Adams, and I've been in the trade space for the better part of 25 plus years. I started on the electrical side, spent a great deal of time in plumbing, and probably for the last decade plus have spent majority of my time in heating and air conditioning, focused on home services and light commercial.
That's it. So what's one mistake do you see either private equity firms or portfolio companies making, and what would you suggest to correct them?
I think that there's, from a private equity standpoint, a little bit of frustration that our industry is made up of mom and pop shops. So your average contractor might be $5 million in revenue and under $500,000 in EBITDA. And from a private equity perspective, they're incentivized to deploy more capital than less. But when you do or execute a buy and build strategy within the home services space, you have to be somewhat patient and tolerant to aggregate revenue and EBITDA because most of these businesses are quite small. So I think that there's a level of frustration in the private equity world that they can't move fast. And what you need is strong M&A competency within your organization to be able to find deals and close deals very efficiently.
How are you handling that then? Because private equity, as you well know, doesn't like to move slow. And somebody saying you've got to move slower and have more patience. How are you managing that as a chief exec between the balance of the PE firm wanting to, be a million miles an hour and you recognizing that some of these acquisitions aren't just going to change overnight?
Having been an operator for quite some period of time, there's a certain level of education that we have to give the private equity groups about being patient. Every seller that wants to sell is not ready to sell. They've never gone through the process. So there's this assumption that, people are going to get a check and they should be incentivized to work as fast as possible through due diligence. But, in the entrepreneurial world of a contractor, they never had their sights set on selling. There's no exit strategy. And often now we see sellers with no next of kin that are interested in taking over the family legacy. And so it's frustrating to private equity because it's a relationship that is established from people like myself in order to get that seller to the point where, they understand what the process is, what their responsibility to the process is, and often deal fatigue sets in real quick. And that's where the private equity groups, run amok and they just don't understand. It's tough, and it's very, very emotional because these legacy brands have been handed down generation after generation. So what's on the front of a contractor's mind is this private equity group going to take care and custody of the legacy that I've built? And so the due diligence process puts a lot of strain on their thoughts.
Is that quite time intensive from your perspective of building these relationships with the founders, the owners, in order to make that transition? So it sounds quite heavy from an M&A perspective, as any process would be, but it sounds there's quite a lot of conversations, which there always normally is, but maybe more in this world as well, as there's a lot more human capital intensive in these types of businesses. So I'm guessing there's a lot more on their shoulders when they do sell, because their families probably work with some of these guys for generations.
Yeah, and as a contractor, we value our clients, but more importantly, we don't make anything. We're a service business, and it's a people business. And what often goes through the mind of a seller is, what is going to happen to my people? Are my technicians going to have a job tomorrow? Is the brand or legacy name in the market going to be here tomorrow? And so, that makes the process very, very delicate. And that's why relationship comes into play. And some of these deals take over a year to cultivate with a seller, just to get their mind around whether or not they can trust the deal. Many of these contractors have made plenty of money, and it's not about the money. It's about care and custody of the people, the customers, and the legacy that's been passed from generation to generation.
Not only am I the host of the Private Equity Podcast, but I'm also the founder and managing partner of Raw Selection. Raw Selection is a private equity specialist executive search firm with two divisions, one that focuses on portfolio, C-suite executive hires, and one that focuses on private equity direct hires via back office and investment deal professionals to the industry. Alongside the podcast, we're passionate about giving back to the industry and giving people information that they can run and utilize. One thing we do regularly every year is we run salary reports on accurate live data of people that we've interviewed and people that have shared their information with us. So if you're looking to compare the current compensation or your compensation for your next hire in your private equity firm or portfolio company, then please check out our YouTube channel and see the playlist of salary surveys. So you mentioned you've been in this industry for many years. Talk to us a bit about the home services sector, that kind of trade services type of business.
Yeah, the home services sector, as I mentioned earlier, it's less mechanical in nature. It's more computer-based, more technologies come in. But what we've seen is a loss of interest from a career standpoint. And that's probably where you look at investors and their hesitancy to invest in the spaces. Are there enough technicians, plumbers, electricians to do this work in perpetuity? The reality is we're probably a couple million short of technicians throughout the country, which from an investment standpoint is a real risk, because the growth of these companies is directly attributable to either the technician in the home offering the customer, additional services, or through a comfort advisor offering them services. And the problem is we just don't have enough of these people that have interest in the trades. And while it's essential, it does not have the allure that other industries like tech or engineering have. And so that for home services has really been an issue for us. So yes, people still need our services, but we have a lot less people and we have more demand than we have contractors.
What are you doing to attempt to combat that?
I think for those of us that are executing a buy and build strategy, we just can't miraculously create technicians. What we have to do is we have to identify, partners in the marketplace that are willing to sell, and growth, inorganically actually gives you the ability to bring on more people to service your customers. So, if you can harmonize your back office to some degree, if you can put in the right systems, actually growing inorganically is the way that we often combat having lower labor availability. And so while it's probably not the most efficient way sometimes, or it can be fairly expensive, the reality is that we just don't have the labor pool in every market to pull from, utilizing the typical recruitment methods. So inorganic growth enables us to buy market share, but equally pick up some really talented people.
It's interesting. As businesses grow and scale in human capital intensive organizations, they realize that they become recruiting organizations rather than the actual service that they provide in order to get the right people to deliver said processes that they've built. So you've been in the industry a long time, as we mentioned. What kind of changes are you seeing recently within this sector? What's new, what's shiny that's hopefully going to stick around?
Well, I think what's exciting for contractors is that essential services is here to stay. We have governmental changes, the SEER 2 change, while it drove up the cost of the system, as I mentioned before, the systems are more carbon footprint friendly. So they're becoming more efficient. The houses run more efficiently, utilize less energy. We have a number of different rebates, whether at the state level or at the national level, that offset some of the cost to the consumer. So, we're seeing higher prices, but we're seeing also the benefits of being or purchasing more energy efficient type systems. So that's super exciting. We have a major refrigerant change, which is driving more systems to be replaced. So on the HVAC side, we envisage over the coming years a lot of replacement systems, not merely due to the age of the system, but just the fact that the system itself is not going to be permitted by the government, and we're going to need to run more energy efficient systems with different refrigerants and so forth, which is going to aid the profitability and growth of the contractor. But simultaneously, it takes care of the environment. And with the rebates, it actually makes the cost a bit lower to the customer.
Okay, interesting. I was going to think you were going to tell me it made it more expensive, but governmental interventions happening and making it lower cost, then you can see why private equity's getting involved. What are the reasons are you seeing? Because we play a lot in the space with C-suite exec searches. So this is a real attractive area for private equity, and there's a lot of people kind of tripping over themselves to get involved, which obviously will drive up prices, which makes it all good for the founders and owners that are looking to sell. But what are you seeing that's really driving the interest here in this space, and why is it such a hot commodity right now for PE?
Well, I think if the focus is on replacement and service, called in the HVAC world, when you have a business where you get paid in less than 4 days and you don't have to hold inventory because it can be just in time, and you can put your parts and supplies on consignment and keep them off your balance sheet, these are all things that investors look at, and they try to determine whether the business is worth investing. And keeping things off your balance sheet, not having inventory, not having large amounts of AR outstanding, these are all very attractive things for investors. And so, private equity loves the space because it's not capital intensive. So we don't have to have brick and mortar because our customers don't face us in a location. We are dispatched to the customer's location. So our cost structure is very, very low. There are very few barriers to entry. And so, as I mentioned before, the biggest frustration is just the mere size of the companies that are out there that are potentially for sale, is that, it's due to a labor shortage. These companies grow through their technicians and field-based employees, and they reach a level around 5 or 6 million, and they can't go much further because in home services, the most intimate form of customer service is when you're going into somebody's home. And so when you're showing that name on the uniform, that legacy, there's a certain amount of care and custody that you have to have. So a lot of these owners are very particular on who they have represent their brand and go into these homes. So they're limiting their ability to grow because it's limited by the few technicians that are available. So as I mentioned, demand is high, and the investment attractiveness of the industry is high, but it does come back down to people, and people are what makes this business go round.
To protect investors from bad hires for your portfolio company, I've collated into a brand new book some of the top tips and processes investors use to ensure they do not hire those bad hires into their portfolio companies. We are giving the book for free for the first 100 people that join the waiting list, so please check out the show notes and get your name down for a free copy. So with any highly fragmented industry, because I'm guessing, a lot of these businesses have been founded by, individuals, then building up a business either by accident or by purpose to grow these types of companies. What's obviously there's key benefits to that level of fragmentation because there's so much acquisition opportunity, but also I'm sure that brings its drawbacks. What's your take on, some of those drawbacks because it's so fragmented and some of those issues that you have to come through because of the fragmented nature of this market?
Yeah, I think in the U.S., there's probably over 300,000 contractors that engage in this type of services. Wow. The problem is many of them are fairly unsophisticated. So from an acquisition standpoint, there's a certain amount of lift that you have to elevate that company, whether it's revamping their organic strategy, whether it's putting in the right systems. And so the integration lift often increases the actual multiple that you pay for that business. So while you think you get a good valuation and it makes sense, when you peek under the covers, how much more expense do you have to incur to elevate that business to actually produce what you want it to produce in today's time period? Often the customer wants to see the technician en route to their home when they have a service call, particularly emergency service call. So without the right system, there's a certain amount of investment that private equity has to make in order to get that company up to par with the customer's expectations. And so, that's a real challenge. And so, private equity looks at it and says, oh, these mom and pops, we can pick them up at a low multiple. But the reality is the integration lift changes that specifically post-sale when you start figuring out how antiquated their systems are in the way they deliver service to the customer.
You're going on a buy and build strategy at the moment with your current business. What are some of the things you wish you knew before you started doing buy and build when you entered that you know now that you're like, this is really valuable?
Well, this is my fourth time I've been involved in a buy and build strategy. And what we did the first time is not what I'm doing now. One of the noticeable changes that we've made is we don't make a big to-do about the acquisition. The acquisition, the word itself has negative connotation. And often what it does is it creates an environment where people go to dark places. And the what about me factor takes over. So what we do differently in this roll-up versus the others I've been associated with is we don't actually make press releases. We actually don't openly announce to our employees that the company's been acquired or sold. What we do is we take a approach that we are a financial investor, and that the analogy we use is that we're putting more gas in the tank. And part of our acquisition model is we require that the seller of the company stay for, a period of time or in perpetuity. So that enables us to keep continuity in the business. And that has proven to give us higher retention and less concerns about what about me, because people aren't asking about the change. They're just doing what they've always done. And then what we're doing as a support function is we're working in the shadows to strengthen that business. We don't necessarily believe that we have to go out and open up new businesses and greenfield operations. We think we can fuel these businesses with an organic playbook and an inorganic strategy without, basically explaining to people that they've been sold. And that seems to resonate because it's just business as usual. And so we've seen some real good results come out of that. And I think if I compare EBITDA and revenue performance to my prior situations versus now, I'd say we're in a much stronger position.
It's interesting. I've not heard of that approach in the market. I've heard of lots of the singing and dancing and the LinkedIn releases when an acquisition has been made, but not the quieter approach of let's just let people continue on as they are and that we don't need to shove it in their face that we bought them. I like that. So what do you watch? What do you listen? What do you read that you recommend others check out, Paul?
Oh, wow. What do I read? I guess what I'm reading right now is a book by a pretty renowned speaker here in our industry, Weldon Long. It's called The Power of Consistency. It's a feel-good story, which resonates with me because I just love contractors, right? Contractors are the blue collar people that make this country go round. And so, reading Weldon's story and where he came from and where he found purpose in, our industry and found a path, and how he shared that story, but shares real sound business acumen with the HVAC community, I think resonates with contractors. We're not perfect people by any stretch of the imagination. So I think Weldon kind of brings that to light. But he has some real good messages in this book. It's a quick read, and I'm enjoying it.
I appreciate you sharing that. And Paul, if anybody wishes to reach out to you, no doubt a lot of contractors that want to congratulate you for what you've achieved, but also thank you for singing their praises. How best do they get in touch, please?
Yeah, I think probably the old-fashioned way. 561-213-2061 works for me.
Let's hope that doesn't blow up too much. But appreciate the your first person to give away your cell on the podcast. So we'll find out if that was a good idea post its release. Well, thank you very much for coming on, Paul. Really appreciate you giving us insight into your passion firstly for this sector, and obviously your love for it, which is, I think, is a great place to be in if you can find a passion certainly for your work, but also an insight into the M&A activity in the market and the human capital intensive challenges that you're facing. So thank you very much for sharing everything that you have.
Well, thank you for having me. I appreciate it.
Absolutely our pleasure. And thank you very much for all our listeners for tuning in yet again to the Private Equity Podcast. If you haven't done already, please do subscribe. Be notified of the next one that comes out every single week. But till the next time, keep smashing it, and thank you very much for listening.